Hey everyone, today on the Final Bar, we have a special year-end edition. I'm going to pose to you the 10 questions every investor should ask themselves at year-end. This is a process I go through every year, that week between Christmas and New Year's, anytime I can, because it's a great way to reflect on how the year has gone, to focus on the lessons you can learn, and to think about how you can make better decisions in the years to come. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a rainy Redmond, Washington. Pleasure to have you join us every weekday after the close, particularly this special week. This week between Christmas and New Year's, as I mentioned in the introduction, is I've always thought of as a very special week. Years ago, I read an article, someone who talked about using that week, using a 5-day, process, Monday through Friday, and the questions they would ask themselves every day. And this was more of a personal development type of thing. And I've adapted some of those lessons and combined it with my own experiences over the years to come up with 10 questions that I think are really important to ask yourself. And really the purpose of this exercise, really helpful at year end, but also could be done mid-year or, other times once a quarter if you really want to get aggressive, because it forces you to take a step back from the normal movements of the markets, what I call the flickering ticks. Think about the overall, your overall experiences as an investor, as a trader, and really focus on what you did well, on what you did poorly, thinking about your strengths and your weaknesses, and how well you've adapted to those or managed those this year, and start to think about what you could do differently, what you could do better. One of my former managers at Fidelity used to always ask, especially during a period of market uncertainty, when we would be trying to get through the other end of that, what did you learn and what are you going to do differently? And I think that is sort of the essence of the questions that we're going to ask here today. So there are 10 questions we'll go through fairly briefly to get them through during the course of the show. But the first three all deal with performance. It's basically evaluating how you've done, best trade, worst trade, and just thinking about your performance and just trying to review how things went. The next three are going to talk about opportunities and mainly missed opportunities, right? Where did you miss out on things that you could have been at or that could have helped your performance, right? Where was something that happened that you just weren't there? And where did you capture some of those opportunities? And thinking about how well your toolkit helped you identify opportunities as an investor. The next three questions then are going to be all about your routines. How did you spend your time as an investor? How are you, do you have a good process for recognizing? Because a lot of times when you have tough performance or missed opportunities, because you don't have a disciplined, consistent way of identifying those things and being where you need to be. So that's what the next three questions are going to be. The very last question is all about your mindset. How do you feel about all those other things that we've talked about? Because I have found that you have to recognize that you're human. You are wired as a human being, which means you have to address the mental component of investing or of trading. It's a big game, and for a lot of investors, it's the game. It's the main challenge is getting through your own mental challenges or mental hurdles to making good decisions. So during the course of this 30-minute show, we're going to try to get to all of these different things. And I would encourage you, I'm going to answer them from my own perspective, just to give you a sense of how I answer them and really to keep myself accountable. I would encourage you to answer those questions. And by the way, these are the sorts of questions that I enjoy posing to my premium members of Market Misbehavior. So I appreciate being accountable to all of you and using this show as a way to, demonstrate to you what I'm seeing and making it very obvious when I get something right or maybe when I don't. And that will probably come out during the course of the session today. I hope you have a group or a person to keep you accountable, and it could be a peer group, a group of traders on a Discord channel. It could be some group, a family member, others that are that are doing a similar thing that you can talk about it, or someone like me, right, that has a service that gives you some accountability. But I hope you find that if you don't have it, because I would argue that's a really important way to improve as an investor is be accountable to someone else. So let's get to the 10 questions. Number one, how would you rate your overall performance? And again, I'm not going to address it as much from my personal account, probably more from my actions as a market observer, market participant, but less in my own trading accounts. And to be clear, I mean, for my own trading, I don't talk about it too much during my show, but I'm a longer term investor. I try to keep a fairly low turnover. I try to focus my attention on helping others make good decisions, and I'm kind of okay with that. So I'm going to answer them more from I think the comments and the actions that I've taken as a market observer. So how would I rate my overall performance? Pretty good. I mean, mixed is probably how I'd grade myself in most years. We'll get to some specifics of a lot of these things. I think overall, I recognize the fact that the market kept going higher. And even though I might have missed certain parts of that, overall, I kept reinforcing, that fact to focus on the evidence. And I think this is an important year to do that. Particularly, I would say, what I'm most proud of in terms of what I'm thankful for are, recognizing things that really started to emerge and work, which we'll get to here in a subsequent question. But overall, this has been a challenging year, and I think that I would give yourself a lot of latitude when you answer this question. This was a challenging year. No years seem to be super easy, but they fluctuate from really challenging to kind of challenging. I feel like this is a really challenging year. This is one of those years where the market did a certain thing, but depending on what you held in your portfolio, you actually didn't do so well potentially, right? If you owned a portfolio of small cap financials, probably had a really challenging year. And so, I think this is one of those years where we used to say you'd get the market call right, but you wouldn't get paid for it, right? Even if you had perfect foresight that the S&P was going to go higher through the course of the year, what stocks or what ETFs did you own to benefit from that? And it might not have gone particularly well. So I think this is a challenging year. This is a year with a lot of rotations. And while I feel like I was able to keep reinforcing that rotational environment, describing the market that way, it was super, super difficult. And I found certain parts of this market, particularly the early summer, late into the fall, I think were pretty challenging. Question number two, and answer that question yourself. How would you rate your overall performance this year? Let's get to question two. What was your best trade and why? Or I'll think of it more. What was your best call and why? A couple ways I might answer this. One, I think, a big part of my toolkit is recognizing strength. And earlier in my career, I worked with a lot of hedge fund managers and traders at hedge funds. And it was much more of a short-term oriented methodology and much more about mean reversion. It was about buying weakness and selling strength, and sort of betting on that natural cycle of investment vehicles. Over time, I think working more at a large investment firm focused on growth, I was retrained really to think about trends and trend following and momentum investing and focus on strength. So a chart like FDS, when it breaks out in the late summer in August into September, is a layup chart. That's a chart that just makes sense to me. This is a big basing pattern. It's hit a resistance level and then bumped up against it for 12 months, a 12-month long basing pattern, finally gets above there and tests the 50-day moving average. And for me, that just seems like a high probability uptrend, recognizes that buyers are now taking control, willing to pay more for this stock than they have in quite a long time, if ever. And I think that's an encouraging chart. I'm appreciative that I was able to highlight charts like this, charts like NVIDIA and others that, were just strong trends that broke out and continue to go high. This is why a lot of my toolkit is driven off of screening for new 3-month highs and 3-month lows. That's to capture things like this that start to work early on in their pattern, but recognizing that strength can beget further strength. The discipline that we talk about on the show a lot of times is not buy low and sell high, but it's more buy high and sell higher. It's a momentum form of investing where you're following trends. And again, it has not worked 100%. I'll show you an example here answering the next question where it did not work particularly well for me, but I am thankful of some of these ones that did work well. I would say the other side, what did I feel good about? I would say recognizing the weakness in charts like Peloton, sort of the ARK trade, right? If you look at the ARK Innovation Fund, which we can go to first, first quarter, if you look in January and February, the narrative on the ARK fund was just astronomically high, right? I mean, this is working. This worked recovering from the pandemic. These things are just going to keep working for a long time from now. A lot of these companies are still early or, not necessarily profitable, but there's upside here. It's the upside potential. And then they came down to earth very quickly in February and March. And I think from that point on, what I feel really good about, why I would describe this as one of my best trades, is recognizing the lack of follow through. So I know particularly here, it felt like this was the rebirth of the ARK fund and how they were just going to go back and regain their previous highs. And what I would highlight is that you needed to eclipse previous highs. We've not been able to demonstrate that buyers are willing to pay more than they were before, which is how an uptrend continues, right? A persistent uptrend. You never really had that follow through. You just had a lack of follow through, a lack of conviction, put in an inability of the stock to make new highs. And that's charts like Peloton and Zoom and others sort of had a similar pattern where they were unable to follow through. They would hit resistance and fail. And recognizing that lack of follow through and that lack of upside conviction was an important one. I feel pretty good about catching that. And also charts like Disney. I mean, just recognizing when things were no longer working, particularly on a relative basis, that you were underperforming by owning names like this, turned me away from charts like Disney before they got really bad, and helped me think about what actually was working and try to recognize, in this case, some strength in other parts of the market. Those are things I would describe as probably my best trades. My worst trades, always so humbling, and I have a couple. I would say the Russell 2000 is probably the one that I would highlight. The most challenging thing for me and for many investors was just this sideways period, right? And when you talk about a rotational environment, there were things that were working. It was a rotation back and forth between value and growth. And there were times when it looked like value stock, the cyclical stocks were just going to work forever. And then all of a sudden the FANG stocks would emerge and be the strength again and start outperforming. And at times there's a month-to-month rotation that you had to stay on top of. But one consistent theme was the lack of participation in the small cap space. And that is something I certainly feel pretty good about reinforcing. Look, small caps aren't going anywhere. You should be in places where they are going somewhere. But when I describe my worst trade, I think it's in early November here when the Russell 2000 broke out, and I felt pretty certain that was going to be it. I thought that was the indication that we were waiting for, that cyclicals were just going to emerge and just bang out an incredible run into early 2021. This played into the stimulus spending, infrastructure spending, stimulus bills, and everything. Just the idea that investments in infrastructure are going to make small, cyclical names where the small cap index is a lot more focused would emerge. Small caps didn't really do well, even though it was sort of a risk-on environment, which is a bit counterintuitive. So it seemed like they would start to work if cyclicals started to work as well. And that breakout drew me in, and many others, I think, recognizing that this was something different. And of course it failed, and it came right back down to earth very, very quickly. And so, I think being super noisy about that being a good idea that didn't pan out was tough. And again, you can't feel too bad about trades that don't work out. I think it's all about risk management, which is why I always reinforce when we're talking about things on the show or with my premium members, anytime there's a good idea, always have an exit strategy. Always have a line in the sand or a level and a signal at which you will recognize that trade did not work. And thankfully, I think things like this, it sort of came back to earth and other things reemerged, and you saw that there were better opportunities elsewhere. But I certainly was drawn in by that initial breakout. Didn't pan out very well. The other thing I would say, and I'm classifying this as a worst trade, although I didn't actually make the trade. I took enough of an action that I will call it my worst trade. So full disclosure, I did open a Coinbase account. I'd never had one before. I toyed with it, but I downloaded the app, and it was right about here. I don't remember the exact date I did it, but it was right when Bitcoin was in the mid 60s. And so I downloaded the app, I opened an account, and I literally remember sitting at this desk, looking down at my phone, and I had this chart of Bitcoin in front of me, and I'm looking down at the Coinbase app, and I'm thinking, this bearish divergence seems really important. And I think that this is probably going to end poorly. But I was so drawn in on the narrative that Bitcoin could go to 100,000 plus, that this was breaking out. We'd finally round tripped back up to the April highs. It was going to go to the moon. And I remember looking at my phone, and I opened the account. I never added Bitcoin to my wallet. I never actually took a position. I kept it all in cash. So in some ways, that might have been the best trade I made, but I'm going to definitely classify as the worst because I totally got sucked in. What's good is I caught myself, and I recognized I need to be patient, and maybe I miss out. Maybe it does go up, but I can't feel bad about being cautious when I see this pattern of negative momentum divergence. This tells me that things are overheated and it's probably going to come down to earth. And it did. However, the fact that I was drawn in and started to go down that path because of that strength, getting totally caught up in the FOMO of Bitcoin breaking out, that's what I don't feel super proud of. Full disclosure, I actually do have a position in Bitcoin now, and I took it down here in the upper 40s as we bounced off the 200-day moving average. And at this point, I still have that position. And it felt as, given the long-term trajectory, the pullbacks that you've had, 30% off of all-time highs, seemed like a decent place as a long-term position that I wouldn't feel too bad about taking. So at this point, I do have one, but at the time I did not. However, I will still classify that as one of my worst trades. What was your worst trade this year? And if you have many, hopefully you don't. But if you have a number of them, which ones are most difficult for you to admit to me or to others, right? And think about that. And most importantly, what did you learn from it? I learned to recognize, to always take a step back and think about the patterns, and not to get too sucked in on things that were breaking out, and to wait for confirmation, and recognize that while I wish my toolkit was always 100% accurate, sometimes it is not, and sometimes I will get drawn into things that don't pan out, and I have to be okay with that. Question 4, we have to pick up the clip here to get through all 10 of them. Those first 3 are all about your performance. Hopefully you're able to answer those. The next 3 are all about opportunities. What did I miss this year? And I would say for me, when I think about 2021, what I missed was just, I feel like I got too bearish in the middle of the year. This middle point of the year seasonally is the weakest part of the year, May through October. This is a whole sell in May thing. And May into June, we had a number of things that happened. The breadth indicators all started to roll over. Breadth peaked in April. If you look, they're about 95% of stocks above their 200-day moving average. That was the peak, and it started to come down. Cyclical sectors, things like financials, did really well April and May. Then into June started to roll over. So by the early summer, or really the beginning of the summer, May into June, it certainly felt like the market was going to take a major breather after an incredible run in the first 4 or 5 months of the year. And I was pretty confident about that. And I feel like I missed that. I missed that renewed strength. And I missed the fact that the market rotated back to some of the growth areas, things like the FANG stocks that started to perform pretty well. And I think of it as sort of a missed opportunity because I missed that rotation. I thought of it as more of a risk-off environment. What it ended up being was more of a rotation, right? A rotation from one leadership group to the others. And later in the year, I recognized that and started to just think about it more in terms of what was going to rotate into a leadership role next. But this was the thing I probably I feel like I missed was the upside potential in the market, even when it felt like things were exhausting. This, by the way, that point was when I started to change my thinking on my market trend model. My market trend model, the medium-term model, turned negative in May. And that was one of the many things that sort of gave me conviction that the market was probably going to take a big-time breather. It didn't really pan out. The market continued to push higher, and eventually I ended up changing my medium-term model because I recognized one of the things I learned a little bit ago was that my medium-term model just was not well prepared for this particular type of environment. It had handled previous cycles very well, but this cycle it missed. So I changed my medium-term model to better fit the dynamics of the market, what I think will be the dynamics going forward. So ended up being a really good learning experience, but I certainly missed the resilience of the market in the summer when I felt like it was probably going to top out. Question 5, what were the top performers, and did you miss any of those? Top performers year to date, if you look in 2021, were names like this. DVN was a top performer, and I'm using the S&P 500 as my universe. You should use whatever investable universe you have. So if you just look at small caps, use the Russell 2000 or the S&P 600. If you have a universe of ETFs that you trade, just use that group and look at them, rank order them in terms of their year-to-date performance at this point. And this is how you do it. For me, I'm looking at the S&P 500, sort of a basic equity universe. DVN was the number one stock. After that, Moderna, mRNA, was the second one. Even though it's down quite a bit, still obviously an incredible run earlier in the year through the summer months that made it one of the top performers. MRO, another energy stock, was third. You have FTNT, which is back up to new all-time highs. Ford was number 5, which might be a surprise, but it's had a pretty significant run. After that, you have BBWI, Bath and Body Works, pulling back a bit recently. NVIDIA, which we talked about a little bit earlier. FANG in the energy group, so that's the third energy stock. Nucor was number 9. Let's see there. And then IT is the last one, which is Gartner Group, which is in technology as well. So did I miss any of these? I mean, certainly. I think with, it's interesting when you think about what you missed, some of these top performers. I think, with energy, if you think of energy as one group, energy as a sector sort of had periods where it struggled quite a bit, particularly coming into this period over the summer. But look at how well DVN has held up. It's a great reminder to stick with stocks that are in uptrends, to look for pullbacks and then look for when that rotates higher, and recognizing that that reaccumulation where people are clearly buying on the dips when stocks are bouncing off of support, not really undercutting previous swing lows by too much, and recognizing that strength. So yeah, with energy, I probably stopped talking about energy a little bit for certain. The DVN, the relative performance has held up pretty well. We did talk about FANG earlier in the year a good amount, but I sort of tapered off there in the summer when it struggled. Look at how it just regained those previous highs, and in the end, it registered enough of a gain through the course of the year. It's interesting if you think about it, though. If you had ridden these stocks really through June and sold them, you pretty much locked in the gains for the year. That was pretty much the peak in relative strength. It got a little bit better there in October, but not a ton better. So this was a good lesson, I think, for me in terms of missed opportunities. I think it's recognizing that the juice was there in the first 6 months of the year. From there, it was elsewhere and rotating to some of those other places. I don't know if I recognize that rotation quickly enough to benefit from some of those top performers. I do remember thinking about IT and focusing on that. This is one of those charts where once a quarter has the earnings release, just kept doing better and better. It's just been this nice, consistent uptrend, and recognizing that pattern was something we talked about earlier in the year, and I think that's an important one. What were the top performers in your universe? Did you miss any of those? And what could you have seen that you did not? Question 6, what were the bottom performers? Did you own any of those? We'll spend just a minute on those. Bottom performing names, it's some gaming names. Penn, LVS was in there, Win. So 3 of the top 10 are gaming stocks. Activision obviously going through a lot of challenges, but I think these charts that struggled, I feel pretty good. I feel that I was able to avoid a lot of these, and here particularly, I think this underperformance really accelerated in the last 6 months on something like Activision. And regardless of whether you ever read a newspaper or read an article about what was happening at the company, the chart told you that things were struggling, particularly here in April, May, June, July. Look how I was never able to really get above its previous swing highs, never able to get back above 100, and then it undercut the lows. And here in July, I think it was a raging sell signal, big move lower below the 200-day. And on that day, it might feel like, did I miss the sell-off? And you didn't, right? There was a lot more distribution that happened after that. Recognizing a failure of support was key with a lot of those charts. I feel like I actually did that fairly well with a lot of those names. So what were the bottom performers in your universe? Were you away? Did you lean away from those? Were you short those effectively? And if you did hold any of them too long, what did you miss? How could you have better managed that downside risk? Those are the questions on opportunities. Let's now get to the next set of questions, which are all about routines. How would I grade my routines? How well did I stick to them? That's the next question you want to ask yourself. Overall pretty good. I'm very lucky that I have a daily show that I have to do every weekday after the close. And it's amazing how well that keeps you honest. Even this 2-week period when I'm not doing a live show, but I'm pre-recording those because of the holidays and wanting to get out and celebrate and see my family and everything. It's tougher for me to stay on top of the markets because I don't have the show every day. That's become a part of my reason to stay on top of things and make sure that I always have something. I have a good awareness of what's going on. I always talk to people about their situational awareness, right? Their market awareness, how well they follow things that are going on. My routines have a couple different key parts: a weekly routine, which goes Thursday through Monday for me, and then a daily routine, my morning coffee routine every morning. And in terms of how well I stuck to them, my weekly routine I kept with very, very well, I would say. Thursday I start doing actually really Wednesday I start screening for stocks making new highs. Thursday, I start preparing, looking at the big picture charts to write my weekly report for premium subscribers on Friday. And then Saturday, Sunday, I do some things when I make time for it. Then into Monday, I finish and do I complete that process of analyzing the market environment. I stuck to that incredibly consistently, I would say, in 2021. Where I did not do as well as my morning coffee routine. My goal is every morning to follow the same set of charts, and I cut corners on that a lot. I usually get through the first couple charts consistently, and then it kind of dribbles off. And I think for me, it's getting drawn too much into the tasks I have set aside. And for me, it's sort of like if you are a runner or an athlete and you, it's like your calisthenics, right? Stretching and doing a warm up and all that stuff. It's super tempting to skip those if you're short on time, but man, that can open yourself up to a lot of potential injuries and bad performance down the road. It's worth investing that in the calisthenics and the prep. And that's where I did not necessarily do as well on the morning side. How could I question 8, what's one way I could upgrade my weekly routine? I feel really good about the way I'm screening stocks for new highs and new lows. I do that every Wednesday, sometimes on Thursdays. And I think I could do that over the weekend as well. I'm going to figure out when I can make time for that in a way that makes sense. But I think doing a more bottom-up screen, maybe Friday, maybe Monday, maybe over the weekend, if I think about it, is going to be something that could upgrade that, because I find that is probably the most important thing that I do in terms of that help me understand the rotation this year. And I think twice a week is even better than once a week for me. Question 9, what's one way I could upgrade my daily routine? For me, is stick with it, I think would be the main thing that I do. So I actually incorporated more cryptocurrencies into my routine a little bit. And I looked at Bitcoin. I added Ether earlier this year as part of one of the charts that I look at every day. I have hundreds of charts that I ideally look at every day just to keep on top of them. And again, for me as a technical analyst, that's what I do. So that should be the main thing that I focus on. But I think adding some other markets like that. So for example, high yield, I added to my routine this year. So I think looking a little deeper at cryptos and looking at fixed income, things like credit spreads, I don't have as part of my daily routine. And I think at times, particularly at the end of the year, you've gotten differing messaging from equity markets versus fixed income markets. And I'm reminded of a lot of my discussions with bond investors and analysts over my career, people that have a background in fixed income. It's a very different market and often leads the equity markets. And I think I've gotten away from that a little bit. So I'm going to be thinking about incorporating those couple things into my daily routine. How are you going to upgrade your daily routine? Do you have a good one? And if not, let's start there. But if you do, how can you upgrade it? That brings us to our 10th and final question. How do you feel about all of the above? And how do you feel? What's your mindset given this environment? I'm beaten down by this year. I'll be honest with you. This is a challenging year. And I've talked to the number of my peers in the industry. We're all sort of licking our wounds mentally. So this is a tough year. It's very rotational, which is challenging. This is not an easy one where you just sort of followed the momentum. There are a lot of false breakouts, a lot of movements, but there are other things that worked. And I think recognizing the differences was a real challenge this year. So, I feel like I'm ready for a well-deserved break. I would also tell you how I feel about all the above. I got away from my daily meditation practice. The beginning of this year, I was doing really well every day at meditating, do some mindful meditation, and I got away from that. I just have gotten back to it in the last week or so, just dealing with the holiday season. It's reminding me what a good use of time that is. What is your mindset? How do you feel about answering the first 9 questions of this show? That is it, folks. And that is the way we're going to wrap 2021. I hope answering these 10 questions is something you either did during the show or go back, pause it along the way, take a day, take a week, and go through and answer these 10 questions. I guarantee you will come out of this experience being able to reflect and improve yourself, or being better equipped to do so. And I hope you had a successful 2021. I hope you set yourself up for success in 2022. And I'm very excited that the Final Bar and that StockCharts.com can be a part of that success story for you in the new year. Have a great holiday season, and we'll see you in 2022. Bye now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.